8:01 is your time. It's a story we've been following all week long as we continue to follow the collapse of Silicon Valley Bank south of the border. Some industry experts say this issue is less likely to happen here, but we're still likely to feel long-term effects of it. To talk more about this, I'm joined now by Benjamin Bergen, the president of the Council of Canadian Innovators. He's based in Vancouver, so it's an early morning for you, Benjamin. Thanks so much for joining us.
Thanks so much for having me.
And just for background to our viewers here, this council is a business council that's focused on helping high-growth Canadian tech firms scale up globally. I know there's a lot to get through, Benjamin, but I want to start at the very beginning. No doubt some things were happening behind the scenes, but it seems like all of this and what happened with Silicon Valley Bank unfolded quickly. Can you tell us what went wrong?
Yeah, for sure. So first of all, it's going to require a bit of a wayback machine or a time machine, if you will. Take you back to 2020. I know it seems 1,000 years ago given the pandemic, but if you remember, the boom in the tech industry was happening. So there was, a tremendous amount of money that was sort of sloshing around, and a lot of startups and scale-ups received funding, and they put those huge deposits into Silicon Valley Bank. And so these were, companies that had money that was placed there. Fast forward to, kind of the last year as interest rates begin to rise, and Silicon Valley Bank put that money into, to be honest, very safe measures. To put them into investments such as, government treasury bonds and mortgages that were secured. However, as interest rates rose, that created sort of a huge discrepancy between the interest rate payout and the amount that was actually being created from these secured investments. And so when Silicon Valley Bank went to go raise capital in order to make sure that it had enough money in order to pay what it was had to, in essence, what occurred was concern that they wouldn't be able to meet their deposits. And so what ultimately happened was a classic bank run that you're sort of used to hearing from, old timey movies.
Right.
And what made this so much more acute was that these are all tech folks. So they're on Twitter, they're on LinkedIn, and they're sharing what they're hearing. And basically some of these large, companies that had big deposits basically, decided that there was too much risk and decided to pull their money from SVB. And that caused a cascading effect. And within really days, this bank basically was going to run out of money, and the federal government of the United States stepped in.
So, yeah, you mentioned the U.S. government stepping in here. A lot of us here looking on thinking, OK, this is a U.S. issue, but we're hearing from experts now that the aftershocks can also be felt in Canada. So what are the impacts here and when will they be felt?
Yeah, so that's a great question. So I've got some good news and I've got some bad news. The good news is the work that we did with the federal government, the Council of Canadian Innovators, was really look at what is sort of the immediate issue. And ultimately, what was determined is that most companies here in Canada that had accounts with SVB are going to get their money back in terms of what they had for deposits. Where there's potentially sort of long-term effects, and I would kind of call this a long tail in terms of its issues that will really spread out for a while, is that it's going to do two things. One, SVB was a bank that Canadian technology companies could go and access capital. And so their inability to get capital will be more difficult. And this was already increasingly becoming a problem. As we saw interest rates rise, cheap money everywhere, not just in the tech sector, was becoming more and more difficult to access. So you're going to have a bit of a 1-2 punch. One, general interest rates making it more challenging, but two, one of the financial institutions that really understood this space has also disappeared. And then that long-term effect is, what does this mean for the tech sector when you have an institution like Silicon Valley Bank, go under? That does cause people to have a bit more concern and take less risk in terms of investing in the space.
That is the next question I was hoping to ask you about, the long-term impacts here on the tech industry, and perhaps you can touch on about that in the U.S. and also in Canada.
Yeah, so look, I think it's kind of the same challenge in both Canada and the U.S. is that, this class of individuals who understood the tech sector quite well. That bank is now gone, so that institutional knowledge, will now be diffused and go elsewhere. And then I think the long-term effect and timelines are kind of hard to know, right? In the short term, everything's kind of immediate. In the long term, we're all dead. But what I would say is, this is going to have a bit of a chilling effect on the tech ecosystem's ability to raise capital. And I think that permeates not just banks, but also, let's say, small investors or, angel investors that are looking to invest in companies. So, across the board, whether you're a small, startup, two kids in a hoodie, or you're a larger established tech firm, questions about the viability of your business and the safety of it, I think it's just being called a bit deeper into question.
Okay, Benjamin, thank you so much for your insight, for getting up early this morning and joining us right here on Breakfast Television. We appreciate it.
Great. Thanks so much for having me.
That's Benjamin Bergen, the president of the Council of Canadian Innovators based in Vancouver.